This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today's 10/19/22, show number 433. So Options X is alive and well, Nick.
Oh, it's alive and well this week for sure. We're seeing these markets are basically all over the place. You know, funny thing, Kerry, this is the Wednesday before options expiration, which obviously Options X is on our Friday, third Friday of every month. But often on the Wednesday before Options X, we see a very, very choppy and volatile session. We call it Whipsaw Wednesday. I coined that phrase many, many years ago. And again, we are, seeing a Whipsaw Wednesday today. It's a day where rallies will be sold sharply and then sell-offs will be met with strong bounces. It's usually a wild day filled with really no conviction, which I don't see any conviction out here right now anyway. But it is Whipsaw Wednesday. So if you're a day trader, you want to be a little bit on the guarded side today. These institutions will whip this thing all over the place.
Right. It's typical in that regard. What about interest rates? What's happening here?
Well, that's really should be the big story of the day. Today we have the 10-year yield up about 8 basis points, sitting at 4.084%. When interest rates go higher, obviously it's a negative for the markets. But the real story is the 2-year Treasury note yield, and most people don't really follow that or even know about it. But really, that's what the Federal Reserve needs to catch up to on their Fed funds rate. And that's up almost 8 basis points today, sitting at 4.512%. So, the Fed has a lot of work to do. They need to get above that 4.5% level on the Fed funds rate. And everybody's calling for the Fed to pivot. It's not going to happen. The Fed cannot pivot right now. They are behind the curve, and they need a lot of catching up to do, especially if this yield continues to rise. If the 2-year yield continues to go higher, which it consistently does, the Fed is way behind the curve, and that's not only a bad thing for them, but it is a big inverted yield curve between 2s and 10s, which obviously is signaling a recession on the horizon, if not already here.
Right. Yeah, I think it's been here for a while, and it's kind of like a weekend at Bernie's. Everyone knows he's dead, but nobody has the guts to say it.
Well, there's only so long you can keep the body around before it starts to create a stench.
Right. Yeah, till rigor sets in, right? And
That's right. That's right.
Yeah, and then the maggots descend. But precious metals, again, getting slammed, huh?
Yeah, it's Options X. We talked about it last week. Be careful. We're going to see gold, silver come down during options expiration. It's nothing new. We've seen this almost every single expiration. Today we have gold down about 1% right now. And again, this should be known. We see this constantly each and every time. But I will say one thing about gold, Kerry. We're getting down to my bigger prediction where I believe gold is going to get into that 1,500 handle. And, we call this pattern. I've seen it before. Dip it to flip it. And, again, let it fall. I can't wait for it to go lower because I'll be snatching it up at my level there. But right now we're not there. It's going to lead to a monster buying opportunity in gold. It's just not there yet. But I love what I'm seeing here. The dip it to flip it is alive and well right now.
All right. And finally, what's new on the Bitcoin front?
Yeah, Bitcoin really is not doing all that much today. I have to say, right now, when we look at Bitcoin futures, and that's what I like to look at, the futures, it's basically flat, treading water, sitting right around that 19,100 area. And again, it's just going sideways. But the longer that sideways base is formed, the more likely we are to see a big dip in Bitcoin. And my bigger picture is for this thing to go sub 13,000. The longer it consolidates, though, I may have to even lower that target.
All right, so it could go even lower than 13,000, maybe a 90% retracement from its peak, which would be 67.7, I guess.
Well, it's possible. Right now, I try not to over forecast anything. I just be a little bit conservative, but I'm thinking maybe like around 12,000 would probably be some support. Then after that, you go into that 10,000 level, which is a whole round number, and that's usually defended to some degree, as a lot of people like those whole round numbers. So that's the best I could give for it right now. In due time, maybe I'll have a little bit more to say, but right now that's the forecast I have for it.
All right. Well, I think we got a good idea of where this is all heading. And that's it for today. Make sure you head over to Nick's site, inthemoneystocks.com. It'll give you some good guidance on how to handle these markets that we're seeing now, which are really in many respects unprecedented. Even though history doesn't repeat, it rhymes, but the rhymes are getting louder and louder here. And don't forget the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz, KL at kerrylutz.com is the place to send your emails to. Don't hesitate to post on the YouTube channel and let us know what you're doing. You riding this market out? Are you in cash? Or are you cautiously trading bounces? Let us know. Nick, we will talk to you on Friday for Options X recap.
Yes, sounds good, Kerry.